Welcome to Classic Value Investors and Microcap Explosions. This is Mariusz Konieczny, and I am very happy to have with me Hugo De Stoop, the CEO of Euronav. Hugo, thank you very much for joining me.
Thank you very much for inviting me. Always a pleasure. How are you?
Good, good. So last time we talked, it's been several months, and as in the shipping space, a lot of things are always happening. So can you take a few minutes just to start with topics such as what happened with the oil consumption, floating storage, and oil production?
Yeah, sure. So indeed, many things happen, and we had a very special year in 2020. We started the year as a bit of a normal year. Then the COVID pandemic hit the world, and that had a direct impact on oil consumption. The producer continued to produce oil, and so as they were not able to sell it, as people were not consuming it, they looked for place to store it. Firstly on land, and then they took a number of ships to do this storage operation, so holding the oil until better times would come. This obviously took away part of the fleet, a significant part of the fleet, and so the remaining part of the fleet that was still available for trading, for transporting the oil, benefited from a very, very good freight rate, so the money that we earned to transport. And that means that the year 2020 was overall very, very good. Then the producers decided finally to cut the production because they were seeing that the demand was not recovering, I would say, fast enough. And that's had a sort of a negative effect on the shipping, because very few cargoes were transported. And when the world was starting from recovering the crisis, and we are certainly not out of the woods, but from an oil consumption point of view, we certainly recovered a big part. The world started to consume first what had been stored, be it on land again or being on the ship. So as the ships were no longer used, they were being redelivered to the world fleet, and we were seeing fewer cargoes. So the supply and demand equation unbalanced. Unfortunately, this time not in our favor, which means the freight rates went through a very dramatic decline. And this is presently where we still are. So we had a fantastic year 2020. The last quarter and the beginning of this year are much less generous for us, as we are in loss-making territory. But we have good hope that when the world fully recovers from the health crisis, the oil consumption will return to normal, and the number of ships that are available to do the trade will be about right, given the increased number of cargoes that we will need to transport by then.
But before the COVID, the oil consumption, I believe, was around 100 million barrels per day. Where do we stand with this consumption right now?
Yeah, we stand at 94, 95. And obviously, when you see big weather events such as the one that the storm we saw in Texas, or the very cold temperature that we had in Europe, then it does increase a little bit more the consumption, but that's somewhat marginal. So it may not be a big number, because as you said, 100 to sort of 94, 95, that's only 5 or 6% decline. But for us, it means a lot, because most of the barrels are the barrels that should be transported, and we only transport, around 55% of all the oil that is being transported. So in effect for us, it's a decline of 10 or 12%, and that's a massive decline compared to the number of ships, which obviously don't disappear when these sort of events happen.
And where do we stand on the floating storage? Is there still more oil to be worked off, or are we pretty much done with the floating storage, or destocking, as you would say?
Correct. We're nearly there. So we had more than 150 ships being used as a storage. Today we are back down to 30, and 30 is a number that we see even in normal circumstances, because you always need from time to time to have a storage place, and as a ship provide a high degree of flexibility, they are often used for that purpose. And people tend to take the older ships to do this kind of storage because they are a little bit cheaper probably. But on top of that, as the ship is not moving, the operation is relatively simple and safe. So I would say we are, if not back to normal, very, very close to a normal situation. And now what we are missing is what I said earlier, is the cargoes, for the cargoes to come back.
Okay. And in your quarterly statements, you said that there are all the elements for scrapping are there. Can you talk a little bit about the elements that you meant that are important for scrapping and whether any scrapping is actually happening right now?
Yeah, the elements are very simple. The elements are that you need to have the candidates for scrapping. So in the previous cycle, in previous long cycle that we had, the fleet had been artificially rejuvenated. So on average, the fleet was very young. There was very, very few ships that had, 17 and a half or 20 year or 22 and a half year of age. And why do I mention specifically that age profile? Because it's at that time that you need to take your ship to a dry dock and spend a lot of money on what we call a big maintenance. It's called a special survey, and it happens in a dry dock. So you need to bring the ship to a dock and then put it dry, so you can really work on the hull. In addition, this time there is a new regulation since 2019 which says that in the next dry dock, no matter what your ship is, you're going to have to install a ballast water treatment system. That's mandatory for pretty much everybody, and that has a cost of million, 1.2 million, or 1.5 million, depending on the system that you use. So not only do you have to spend a lot of money because your ship is old, and so the maintenance, a little bit like a car. I mean, an old car will require more maintenance and therefore more expense. But on top of that, you have an additional layer with this ballast water treatment system. So we have enough ships that are falling into that category. So that will have to pass a survey this year in 21, be it in the first, second, third, or fourth quarter. And we have a market that is definitely not lucrative. So people are probably not going to spend that amount of money in order to return to a market that is not providing any return against that additional investment. Against that, and that's the other element which is very important. If people decide to recycle their ships, and hopefully they will do that in an appropriate yard, they will get something like 17 or 18 million dollars. Knowing that a new building is around 88 million dollars today, it's a significant part of your ship that you can recover, even though you're eliminating it. So on the one hand, you have to spend capital and you won't get a return, certainly not an immediate return. So your bet is a long-term bet, which is dangerous, risky. On the other hand, you can receive money, and you can receive a significant amount of money. So we believe that the ship owners will react in the way that they've always reacted, and will choose to recycle their ships, receive money, and then potentially reinvesting that money into a new building or something like that. But in the meantime, that all ships would have disappeared from the trading fleet.
And is the scrapping already happening, or is this something that you think is about to start to happen?
Well, we've seen a few ships. So last year, as I said, it was a fantastic year. So I guess that people are always hopeful that these fantastic rates can go on a little bit forever. So the guys that had to pass survey probably did that last year, even though there was also a number of people who said, "Look, I cannot pass the survey because I'm storing oil for 6 months, and therefore." There is no way that I can go to a dry dock while my tanks are full of crude oil. So there's a number of ships that have also deferred their scrapping for this year. And this year, well, we are only 2 months or almost 2 months into the year, and we've seen about 10 or 11 ships being scrapped. I would say that a good year of recycling is about 40. So we are a little bit ahead. If we had the same number every year, every quarter, we are a little bit ahead of that. So we are very much hopeful that it will continue at that pace. And certainly when we look at the freight rates, people continue to be incentivized to do that.
Okay. All right. Thank you for this. So let me pivot a little bit to asking you more specific questions about Euronav. I noticed in your quarterly report, you mentioned your rates that you're getting for Q1 2021, and they are pretty good. And
Really.
they're pretty good when you look at in comparison to the headline rates that I'm seeing.
Mm,
And I
yeah.
was wondering why are your rates better than the headline rates?
Um, the headline rates are being provided by the brokers, and they do an assessment of the market on a daily basis. Um, it means that they do not take into account a number of operational things that we can do. So, for instance, when the rates are really bad, we will slow steam. We will reduce the speed of our ships. And as the consumption is exponential, if you reduce by 1 or 2 knots, you can save already a lot of money. And as you know, the rate, as we provide them the TCE, which is a time charter equivalent, provides a number of dollars per day. But in fact, it's the freight that we receive from which we need to deduct the fuel. So if we consume less fuel, then chances are the TCE is going to go up in value. So that's one explanation, and that explanation is true for absolutely everyone. There is a second element to the specific consumption of our ships, is that we have a very modern fleet. We have a fleet of the majority of the fleet is eco type of ships, and so they consume on average 15-20% less than the older generation, which still represent the majority of the ships. So when the broker report those rates, the standard ships for them will be the non-eco ship and not an eco ship. But as we have a majority of the ships that are eco, then we are already benefiting from this additional lower consumption and therefore lower expenses than the others.
Okay. And the rates that you are seeing right now, are they adequate enough for Euronav to be cash flow positive, or are they at a level where you're burning through cash?
So what we announced in Q1, and as we're a public company, I cannot really tell you where we are today. But what we announced is exactly at the break even. So, $17,000-$18,000 a day is our cash break even. It's not P&L break even, so we are certainly making a loss on P&L, but cash is always more important, of course. Since then, the rates have deteriorated. I'm not going to tell you where we are on average, but today in the market, you would fix ships for anywhere between 12 and 15,000, and from time to time on certain routes, you would even get only 9,000 or 10,000. So I think that the this quarter and probably the next one, and maybe the second half of the year are going to be really difficult. You use the expression burning cash. It's true that it's not a pleasant feeling, but let's not forget that we are a little bit used to that, in the sense that we know that we are in a cyclical industry, which means that our balance sheet, our liquidity, all of these are the tools that we are using in order to continue to operate our ships in the safest manner throughout the cycle. And as long as the money we are making and the duration of the positive part of the cycle is more and better than the negative side of the cycle, then obviously we are very happy. For people who are not familiar with the shipping industry, I think that it may feel very, very strange to see a company doing its best year ever. We had 470 million profit last year, so close to $500 million, which is a gigantic number compared to being in loss-making territory in Q4 and in Q1, and probably for a few more quarters. But that's the nature of the industry, and we have decided to be a player in that industry, and we have picked up the elements that enables us to outperform the rest of the industry, but very much be strong in an industry that has this kind of volatility, cyclicality, and seasonality.
Okay. Now I'm looking at the rates, and I noticed that Afromaxes are performing better than VLCCs and Suezmaxes, and I know that Euronav doesn't have Afromaxes, but can you comment about why Afromaxes are outperforming the other two?
Um, The VLCC and the Suezmax are very much correlated, and the reason why they are correlated is simply because when you have a cargo of 2 million barrels, it's relatively easy to break it down into two times 1 million barrels. So if the VLCC is if the Suezmax is very cheap, which was the case earlier this year, where the rates on the Suezmax were even more negative than on the VLCC, then the VLCC is going to suffer from it. And the opposite is true, except that there are from time to time port restrictions. The Afromx has a market on its own, so it is influenced by the market of the mother and the grandmother, but it's not a market where you see people who are active in Suezmax or VLCC coming and breaking their cargo further down. So I guess it's more of a question of supply and demand in that market. It is true that at the moment it's better, but quite frankly, I mean that's a picture at one point in time. We continue to analyze and to believe that Suezmax and VLCCs are better investment overall, and that's why we are focused on those two segments, not because we look at one particular quarter, but because we look at a longer period of time. And let's not forget that a ship life is about 20 years.
I noticed that from your press releases, you actually ordered a couple new Suezmaxes. Can you talk about your logic behind this purchase?
Yes, absolutely. First of all, I need to tell you we didn't order. The reason why we are always reluctant to order is because that every time you order a ship, you're adding supply to the world supply of ships, and therefore you are in a way deteriorating your own position, your own existing position. So it's something that people have difficulty to understand. But if you don't want to deteriorate your position, then you need to eliminate a ship or scrap a ship or recycle a ship or sell a ship for conversion or something like that. And that's not always possible to really have a good match. And anyway, if you are eliminating one ship and not ordering one, you're still better off. So that's the reason why we are always a little bit timid when it comes to ordering ships, but I will come back to that in a second. The ships that we acquire are, in fact, ships that were contracted by a party who could not meet its financial obligation. So when you contract a ship, when you order a ship, you will have to pay installments. And they start on the moment you sign the contract, but they are minimal. And then as the ship is being built, you are paying installments to the yard. That party could not meet its obligation, so the yard came out and said, well, they are in default, so we're no longer going to build a ship for them, but we've started building those ships, and therefore we want to sell them to someone else in the market. And so they organized a tender, and we were happy to win the tender, and that's the way we ended up having those two ships. So it's almost like the second-hand market. Now, the ships are being built; they're going to be delivered in the first quarter of next year, where we believe and hope that the freight rates are going to be superior. So that's also a nice way to avoid the loss-making part of the cycle. And then those ships are very specific because, as you know, we have continuously improved the performance of the ships and certainly the consumption and therefore the emissions. And those ships are not only the latest design, the latest eco design, so they are not very thirsty in terms of fuel oil, but on top of that, they have a classification that enables them to be converted relatively easily into dual fuel fuel oil LNG, and we are working to make also compatible for ammonia if that would be the type of fuel that would become a standard in our markets in the future. So they are very good ships, they are very modern ships, they are already economical, but on top of that, they are somewhat future-proof ships because we all know that when we go through the exercise of decarbonization of the shipping industry, we're going to have to move to fuels that emit less or don't emit at all CO2.
At the end of last year, Euronav has done some share repurchases, and in your recent statement, you said that you might do an additional 50 million US. I was wondering how you would be financing such a purchase and how you look at your company in terms of undervaluation?
Yeah, well, it's again, that's the beauty of shipping. It's relatively easy to look at an NAV. I mean, when companies look at their NAV, they have to make projections, and that's how they compare their situation with their share price. In shipping, is relatively easy because every ship has a value, as there is an active S&P market for secondhand, and so we take into account all the value of the ships in our fleet. We deduct the debt, of course, and then we divide that by the number of shares, and we compare that to the share price or stock price on the screen. And when there is a significant deviation, negative deviation, we tend to buy our own shares. The next analysis, and maybe is the determining one, is we look at the share price and we do the opposite. So we calculate what the share price is telling us about the value of a VLCC, and usually we mention a modern VLCC. So let's assume that a modern VLCC in the market can be purchased at 86, 87 million dollars, which is roughly speaking the case at the moment. If our share price tells us that um, that price is the equivalent of 75 million, we know that we have a 10 million difference, and that's directly, almost directly, a no-brainer to go and buy our shares in the market. When we are at higher levels, and let's say that we go back to 100 or 110 million for a ship, and the share price indicate 100 million, we may not buy back at that point in time because we think that the level is still too high. And so buying back our shares, despite the fact that it's discounted compared to the market values, may not have long-term benefits for our shareholders. So last year we were at a point where we were buying shares anywhere between 72 and 78 million dollars, and that is the absolutely rock bottom price for a ship that we have seen in the last 10 or 15 years. So it was a no-brainer, and we didn't hesitate to spend 118 million, in fact, of total repurchase last year. The 50 million that we have announced, we haven't started using it because, funny enough, when we did the announcement, and it has nothing to do with us, but at the time we did the announcement, we monitor a very nice rally in the shares. So since announcing our earnings, we went up by about 20%, maybe 18 or 19%, because in the last 2 days we have lost a little bit of those gains. But so we didn't feel that it was appropriate to enter into that program, but it's available and we can tap into it anytime we want.
Okay, and I did an interview with Robert Bagby a couple weeks ago, and he was mentioning to me that there are some refineries that have shut down, and such shutdowns benefit the product market, but might not necessarily benefit the crude market. Could you talk a little bit about how you see it and how maybe Euronav is navigating?
Yeah, sure. Um, well, first of all, Robert has been a big advocate for the product tanker market, and for some reason, has always compared to the crude market, where I believe that they are somewhat different, and certainly in their behavior. And personally, I've never monitored a good product market if the crude tanker market was not good. But that's maybe a parenthesis. On the analysis, I think that he's right about the fact that many refineries are shutting down, but most of them are shutting down in Europe. And when you look at Europe and the way they were getting their oil, it was mostly by pipeline, and also on smaller ships because the ports are smaller. So we're talking about Suezmax, but also a bunch of Afromx, really crossing the Med to deliver the oil into the EU. So as far as the big segment is concerned, the big tanker segment, VLCCs and Suezmax, we don't believe that's a real threat. And we believe that with the amount of refineries that are being opened in the Far East, and specifically in China, we are benefiting that better than if they were staying open in Europe and we had to service them, which most often is not the case.
Okay, and Hugo, the final question that I have for you is, if you were a money manager and you were asked to allocate money into the crude or product tankers, but you could not buy Euronav, which other companies would you buy and why?
Oh, it's a tricky question, but it's I don't want to be too Jesuit, but first of all, I'm not very knowledgeable about the product tanker market, so I don't want to speak about it too often. Having said that, if you are convinced that the product tanker market is a good place to invest your money, then I would choose the largest vehicle because they provide ample liquidity and you can buy and sell your shares without moving the share price. So Scorpio is definitely one of the company where you will find this good liquidity. Afnia is probably another one. As far as the VLCC or Suezmax market is concerned, we do have a number of relatively large companies. We do where you will find a decent amount of liquidity. And it's the usual suspects. So you have Frontline, you have DHT, you have INSW to a certain extent. And let's not forget that in our segment, the tide lifts all boats, as we say. So if the market improves, we will all improve in nature. So if you tell me you cannot invest in Euronav, it's too bad, but it's not really a problem if you want to be exposed to that market because the other peers will provide you some, if not most of the benefits that themselves are going to be provided by the market. So if you ask me to choose one of those companies, I think that I would choose one that is levered to the upside, and I would probably choose Frontline. I think DHT is also a very good company. INSW has a sort of a different pedigree because they have a mixed fleet of crude and product. And if I was an investor, I would probably think that I want to choose either product or crude, and I may time my investment at different points in the cycle. So it really depends the nature of the investor. If they want to have a mixed bag, then INSW is providing that. If they want to specialize companies very focused on what they're doing, then the others are doing that.
Okay, well, thank you very much, Hugo. Do you have any other concluding comments that you would like to share with the viewers?
No, maybe the only thing I would say is we are in a cyclical industry. I mean, I started by saying that, and we have to accept that you know, one year we make super profits, and then the next year we don't make as much profit. When you look at the share price, it's a different story because capital markets are always forward looking. So if you're waiting for the market to recover, you may miss a very interesting entry point. And that's the only advice I would give to the investor. What does it cost you to sit for the market to improve, or maybe if you see the early signals that the market improve, I would highly recommend to jump on it because otherwise it may be too late, and you may not benefit from that trade as much as you would do when you're buying at the bottom.
Well, and I think this is exactly what's happening with the share prices right now. The market is definitely looking forward. So thank you for this interview, Hugo. It's been a pleasure, and let's do it again sometime in the future.
Absolutely. Well, thank you very much for the opportunity, and good luck. And thank you very much for organizing this.